The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Thursday edition. This is Thursday, November the 20th. And thank you to Steve and to John for 3 great hours. We've got programming all the way through today. I will be filling in for Daryl Martin, and that'll be at 1 o'clock. We'll be able to get a chance to look at some 10-minute charts. I haven't done that for a little while on the show. So here's a 10-minute chart of the E-minis of the S&P, gone from a low today of 35.25. It is a very strong reversal to the upside, just like yesterday. And what I mentioned to my subscribers on my opening call, when we're looking at the technicals, it's rare to see the stochastic holding up so well in the 90% area. And that makes me a little bit nervous to go short, but it also says that we are really close to some kind of a pretty sharp sudden pullback, and we've raised stops. So we've been raising cash, actually. Took profits in some of our positions. Very tiny losses because I didn't want to be stuck today in case the market continued lower as it was in the futures. And what I'm looking at really is a situation that says there's a rotational aspect to this that is really quite interesting. Just have a look. I'm going to move this 10-minute chart away, which looks like it's going to go to leg C. This is the core of the Chapman wave methodology. You identify the lowest low bar. From there, you should be able to count 4 successively higher peaks if certain conditions are met. In this case, it looks as if there really should be a move above 2050.25. At 2050.50, the E-minis will go to leg C in the 10-minute chart. I'll be doing quite a bit of that work in Daryl's program at 1 o'clock. So and he uses the Nadix platform. I will not be using the Nadix platform, but I'll show you some really nice techniques that you can use in your short-term intraday trading. But look at this. You've got the E-minis December up 275 at 2049.75. What's really important about this is it went right again to the 9-period exponential moving average. I'm going to make this nice and big so that you can see what I'm looking at here, and then I'm going to go to all the numbers. But this is such an important couple of days coming up, because in the Chapman wave, you get to a D, it says, oh, be careful. But there's a particular technique that I teach in my Master Trader series. It's something I do discuss, but I then have the time, and I can show and I can discuss with the attendees personally what can you see that I'm looking at that you're not looking at, and then I can go into it in great detail. But just suffice to say that that little red line there says the upside is limited right at the moment. But it also says that there's a chance that you could get what I call a Chapman wave instant restart. Instant restart means that at a peak D, the 4th highest peak, that's the objective in the Chapman wave, to go from the lowest, most identifiable low bar, doesn't matter what time frames, to at least 4 peaks high, and then other things can kick in. Peak D, as you will see in this chart of Baba right here, can give you quite severe sell-offs. Look at that. This is Alibaba. Went from 120 round number high, peak D, down to a low of 107.22. I would say 13 points, 11% or so in a very short period, just 5 days, is a pretty big move. It is an IPO, and it's got a nice chart today. Let's go back to the E-minis. Now look at the E-mini. It's holding the 9-period moving average, the black line. Make it nice and fat. Look at that. Beautiful. Just goes under it for a fraction of a second. Boom, back again. So this is showing you that there's internal strength. Why? Because the MACD, the moving average convergence, divergence is still extremely strong, but the histogram is starting to narrow towards the 0% line. That's just a warning to say, hey, be careful. And the other thing is that the slow stochastic is flat, and at 93%, it's showing internal strength. That's the reason why I did not want to implement shorts, but I did say to my subscribers that today I'm going to, very rare, I'm going to give an update at 12:15, soon after my show in an hour's time. A pity, I wanted to give it an hour ago because there were two trades that I wanted to put on that were absolutely, they're moving beautifully. I'm gonna have to rethink how I do this now, unfortunately. But on the long side, not the short side, it's just, to me, this is totally fascinating how I have no choice but to watch my charts, because emotionally, I'm saying, hey, we are due for a 150-point down pullback, 17 points in the S&P. We haven't had look at this, we haven't had an ugly candle to the downside. We've had it once in the last 27 sessions or something. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. 21 is D. Remember that. 2, 3, 4, 5, 6. 26 sessions. Little dojis for 10 sessions. This is quite something. It is. Actually, I gave a talk last night to a group, and I was able to go off track. Not very difficult for me to go off track. It's usually on track, but it's off on a different sphere to what most people are thinking about. So I need to introduce them to the new ideas. Well, remember the other day I was talking about, I mentioned that in the International Musicians Union paper, there were ads for, there was a couple of notices that said Chicago Symphony Orchestra is seeing record ticket sales. Atlanta has turned around from almost failing to becoming a very successful. They've even got an endowment, and a whole bunch of things are positive. And I said, I don't understand musicians. I get the Musicians Union, and they are constantly, basically decrying capitalism. How greedy and greedy. Come on. For goodness sake, you guys wouldn't be in existence if it wasn't for capitalism. Who the heck do you think is paying to be able to for Chicago Symphony to have survived, to Atlanta to survive? Come on, they work together. So then, lo and behold, today, what do I see? Just unbelievable. So I spoke about that last night because I was talking about capitalism, etc. Lo and behold, what do I see? There's an article in the art section of the Boston Globe G section, the G section, and it's by David Weininger, and it's about this young woman, Claire Chase, spirit of invention, flute genius Claire Chase delves deeply into Density Project. Well, Density 21.5, a piece by Varese, an American composer, wrote this piece. It's the density of silver, and he wrote it for a flute. It's incredible. It's like the benchmark of flute pieces of the 1900s, and it's a contemporary piece, and it's really good. It's a really interesting piece, lovely piece. Anyway, she's got this whole project now. She became a MacArthur Award winner. What is a MacArthur Award winner? It is capitalism. $250,000 it used to be. Now it's, I think, over $300,000 given to who the MacArthur Committee considers to be geniuses in their field. Rand Blake here in Boston got it. He's third stream music. It goes to people that they deem fit to receive this amount of money, and they can do anything they want. So what she's done is she's got this these projects that she started called ICE, International Contemporary Ensemble, and she has taken 1 year's worth of that money, and she's given it to them to create new projects. And she says musicians have to embrace the idea of entrepreneurism. And what she says is actually the real word, if I can find it here, is the spirit of invention. It's activist. You want to be activists. And I see the tie-in. It is so nice. Now, of course, it's a little complex, but the idea is that the creativity, and as Steve Rose was talking earlier on, he's got a program coming up, a project that really covers 7 weeks. It's very interesting. Go to the front page of TFNN and check it out. But he was talking about how he has to recreate things, and he finds that he has to recreate his own thinking at different periods, and how he's formulated this whole program in this particular project of these two webinars that start off on Saturday, and then they end. It's like a sandwich. And in the middle, he answers all your questions, and he follows up. And so you've got to be creative. So in this idea of creativity, I've developed all these different techniques. And the technique that says to me, watch out here, because there's a pattern that I've drawn on the left side called the Chapman wave stalk leg formation. There is just a chance that we could spike higher here and raise the base on the shorter term. That's not to say that I'm still looking at this and I'm saying 26 sessions with just one ugly candle, that IBM down candle right there on the 22nd, I think it was, of October. Yep, 22nd of October. And that we aren't due for a wipeout of at least 5 to 6 of these candles. But that still only takes you down to the 17,400s. That's only 200 and 300 points down. This is such an interesting period. Why did I not want to start the shorts? I might still start the shorts today, because this is what I normally do when you get to the Dow at peak D. But look at this. There are two fighting patterns here. The E-mini is up 325. There's the arch formation, which held beautifully in that rectangle. We must speak about rectangles. Support at 2,035. And now look at the move that's initiating an idea that maybe there's a cup formation, two fighting a rotary, the fighting arch versus the cup formation. Very interesting. All right, let's run the numbers. The Dow, whoops, where the numbers go? The Dow is up 4 at 17,689. The S&P is up 4. Stronger than the Dow at 2,052.75. The comp index is up 22 at 46.98. Gold, look at this. GCZ. I'm going to do this in my period that I'm with that I do Daryl Martin's show. Look at this. Gold is holding quite nicely. It's down 4, but what is fascinating to me, let me just move this away here. I haven't finished charting this 120-minute chart. Is that the dollar, look, the dollar is down a penny at 87.64, holding the 9-period moving average. Remember, we're just looking at those moving averages in the E-mini daily chart. Well, look, if the dollar starts to take out the 87.40 area, it's at 87.64 on the index, then this candle here, Chapman wave Roman candle, if you start trading for 2 to 3 2-hour bars in the 87.30s, there's a real good chance you're going to test the low of 87.18, and then you're going to see the GLD start to move higher. Right now, it's just a nice little consolidation after a big move, but not a great move. A big move from 109s up to the 115s. Taking a bit of a breather here, holding nicely above the 9-period moving average. I think that the dollar is struggling here, and it's telling us that it's just having a digestive phase. Currencies usually stay in position for a long time, a year sometimes. So, with that said, let me just finish up. Bonds are, the TLT right now is up 51 cents at 119.27. Had a nice spike, went to peak A, B, C, pulling back as a spiral to a leg D in the 120-minute chart. I think that yields are just stuck in this trading range. And I don't think I've missed too much, because we're going to go to a break right now, and then I will get to Travis and Will. I hope you guys can wait. I do want to discuss exactly what you're talking about. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 7, S&P's up 4.5. Wow, this is the Energizer Bunny for sure. It is amazing. Well, in the Chapman wave, there is a particular pattern that I'm looking for that could very well unfold in the daily chart, which says, don't be surprised if it goes slightly higher over the coming few days if certain conditions are met. Let's go to Travis in St. Louis, Minnesota. Right. Hi, Lewis. How are you? No, Minneapolis. Wait. Missouri, right?
Yeah, St. Louis, Missouri. How are you?
Yeah, I should have known that. The other day I said the same thing. And then afterwards I said, of course, M.O. is Missouri. We used to have someone in the den from Missouri, and he was a long-term position player, and he would come up with these things out of the blue to say, I'm going along DuPont, or whatever it was. And then everybody look, and then, geez, 3 months later, DuPont was acting so well. Really a wonderful position player. So, Travis, you're looking at?
Yeah, let's circle back to Clovis again. I know we've had a couple of calls on it in the past.
Yes.
And I told you, I've had a position in it for a long time. I told you there a couple of weeks ago when we talked, I sold half of my position after it formed a peak D in the daily.
Correct, yes.
And we talked, I think, that day or the day after that, and I told you the data was coming around the 18th of November. Well, we got that data on Tuesday night.
Right, it gapped down the next day.
Gapped down a little bit. I actually started to buy that position back yesterday.
Okay.
Because I love the company longer term. The drug itself, they actually have two drugs, but the main drug I'm a big fan of. So, and the data was impressive. I just think it was kind of priced into the stock already, which is why it gapped down, but not badly. And I think it was a great buying opportunity yesterday. So just wanted your opinion longer term on this now.
So let me just go this, folks. We're looking at CLVS. This is Clovis Oncology, Inc. Trading at 49.79, up 151, up 3%. It made a pattern that we are very familiar with. I didn't get a chance to talk to you afterwards, but what happened was it made, you remember in the Chapman way, folks, we look for four higher peaks. And those peaks are, it doesn't tell you how high. It just says there should be 4 higher highs, and I'll label them uppercase A, then uppercase B, uppercase C, uppercase D. D is where you can expect things to happen. Could recycle to the upside. That might be what's happening now in the market. Or you could make a turnaround, and it's a time or price. Sometimes it's both. What happened is it made a particular candle on the 31st of October at 62.20, having gone all the way from the 40s to that level. It's a very nice 50% gain. And then what happened is it turns around and it drops quite suddenly. It goes down to the 7th of November to 54.54. Rallies back up, but fails to go to the, I didn't type that in, 62.20. It fails to go to the 62.20. Instead, it goes to 61.48. Makes the pattern that I refer to as the double top. It's called the drop bucket pattern. It looks just like a backhoe that lifts up. It's got that bucket, and it lifts up the bucket and then just drops all the trash. And this is exactly what happens. It goes up, double tops. The MACD and stochastic are just fading miserably, and it turns around and it comes back down. And my rule of thumb is if it comes down 1/3 to 50% of the lip to the trough of the previous move, be careful, because it's liable to touch the bottom, and if it doesn't hold the bottom, it can give you a 1-to-1 to the downside. That's exactly what it's done. It's gone right through the 200% moving average of 50.84 support. It broke down with a gap down on Tuesday. Yesterday it had a kind of, no, that was yesterday. Today it's got kind of an inside bar. The 120-minute chart right here is saying that there's a very nice little candle, nice turnaround, that the low that was made, let me look for some round numbers. There it is, round number at 48. Yesterday 330, today it goes, and then it goes a little lower to 47.56 in the 120-minute bar, and today it's already traveling up at the 49.70 level. So here's what I'm going to suggest. The move down is actually a little deeper than I already said to you, that the move down from that peak C, everything about it looks like it should be a D because it was so deep. But the fact, and what I've learned now is I need to keep that thick 200-period, a 9-period moving average in the monthly chart. I must keep it thick so that everybody can see it, because it is so significant. When I was working with it last night, folks really could see it. They called it the worm. It looked exactly, it does that. It's really important. And what's happened is gone under the 9-period moving average of the monthly chart. So if I look at the weekly chart, that's going to be very important, because we're into a peak C. And as I said, even from that C in the monthly and even this last one in the weekly, it's a little too deep, but it's a biotech. So we have to excuse the fact that they accelerate moves. So this is what I'm thinking. Do I hear a break coming up? Yeah, I hear a break coming up. What I'm going to do is I want to do a little bit of work to tell you the parameters I'm looking at. I think your entry point could very well be just a terrific one, but some things have to happen. It has to fill the gap, and it has to do it quickly. I'll be right back. We'll talk about it.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So the Dow is now up 7, S&P is down 450, and we're looking at CLVS, which is Clovis Oncology, and CLVS. During the break, I had to also look at some other things. So this is what I'm going to reckon. We've just started our next 120-minute candle, and you're in the position. Is this your full position, or do you?
I'm pretty well loaded up now. I mean, like I said, I took half of my original position off up around 60,
right.
and I put pretty much all of it back yesterday. I would add a little bit more if it doesn't hold yesterday's low, because you know, if you look, it's a trough D in the daily actually yesterday. If it doesn't break that 47.56 low.
It's a trough, and not only that, in the 120-minute chart, it's a trough F, and you've got a nice turnaround, but the stochastic is at 14%. This is what you really want to see. You're in the position, so all I'm saying to you, these are the guidelines that I would use, and the guidelines are basically saying The 200-period moving average of 52.39, it broke under it, it gapped down, it was like it was ice, and it just collapsed under it. Now it needs to do pretty much the same thing. The best case scenario would be as if it was to gap and make a gap in the 120-minute chart right there above 52.21. Oh, it opened at a 50 round number. Interesting. So 52.21 and quickly fill and push towards the 53, 50, 54 area. To me, that would be absolutely terrific action. I'd be a little concerned, just on the shorter term, if in fact it gave it up and it went under 47.56 for two reasons. The first one is that this would be the opportunity, the candle after the gap down, if there's an inside bar rather than a new low. I love seeing that. Why? Because it says that it's reverting to the mean a little bit. It's saying I'm trying to get back at least to the gap or to where I was before the gap. And if I can get above the doji candle of the 18th, above that 54, 55 level in a reasonable period of time, to me that would be within a week and a half to 2 weeks. That's about 6 to 7 trading days. To me, that would be the perfect sign for you. Therefore, I'd be a little cautious that if it broke to a new low, the weekly chart is saying, you know what, I need a little more time, I need something, I need more news, I need something, and until I get that, I'm just going to hang out between the 46 to the 52 area. That's kind of the way it looks. So that's one of my recommendations is, you're in it, I don't want to change your mind because you know this very well, you know the stock. I'm just saying, I would be looking for a retracement, making a significant rectangle formation right there with the candle that was formed yesterday, and I'd like to see a break above it. If it breaks above the wick of yesterday's high, 52.37, that'll be really good action, and it needs to just stay there, not make the H pattern. It needs to make a steady V-shaped pattern. It doesn't have to be a V per se, even if the angle of the V is only 22% to 25%. As long as it's making higher highs and higher lows, that's what you want to see. Hey, nice trading there in that position. Congratulations, Travis. Good luck with this one.
That sounds great. I'll keep you updated on this as I go along.
Thank you very much. So, folks, we just lost Will from Warner Robins, Georgia. I'm sorry about that. Will, if you are listening, I hope you're listening and you just couldn't be hanging onto the phone like that. It was really about gold. All I'm going to say is to make it real simple. If the dollar pulls back and the dollar breaks, let me just tell you exactly what it needs to break. If the dollar index closes for 2 out of 3 consecutive sessions underneath 87, that's going to say that gold has a chance to move the GCZ contract, would then have its first real chance to have a sustained move to the upside. I'm still calling this a short term because the currencies don't change on a dime. Joke. The dollar is in a bull move. We'll see how it pulls back. I think it's going to be shortish term. So the gold has a chance of going from 1189 to the 1244 9-period exponential moving average if in the next, by Wednesday a week, just before Thanksgiving, if gold has broken the 9-period exponential moving average of 1204 and punched into the 1212 area, that's going to be very good, and then 1244 would be my target for this move. And then we'll have to see. Any pullback in gold underneath 1150 in the next, between now and Wednesday, would say, the dollar is holding up. It's making a high-level consolidation. So you can still call me if you want, Will, but I just wanted to go through that. I don't know your position, but that's the way I'm looking at gold. Let's go to Mark in Denver. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you.
Good. Hey, so we've been short the semiconductors before.
Yes.
And I decided on, what was it, the 18th, 2 days ago, the SOX, SOXX, made a P. It looks like a daily peak F, and it's very close to matching the price, the high price from the 19th of September. And I went and bought the triple short, the SOXS, that day at 1584. And it looked like it was going to start to back off. It's backing off real good this morning, and it's made a nice comeback today. So I was wondering what your thoughts are.
So we're looking at the SOXS, right?
Yeah, but I kind of played off the SOXX. So I was looking, and that had made a peak F in the day.
So do me a favor, when you're looking at these things, try to go to the root. So either use the semiconductor index
right,
or the SMHs, which is the ETF.
Right.
And if you use that, then I agree that this on a purely labeled situation for the Chapman wave says that this should be leg F right now that we're at, but I would automatically go F/B for two reasons.
Okay.
One is, yes, there were 3 bars, and it does look like it could be an instant restart. So now I'm going to discuss the stuff that I was going to discuss with my methodology. There's a technique that I use that says to go to a G, doing exactly what you're doing, except there's going to be a missing letter. The letter is that we're not going to a G/C. We're going to go to a G. And that would say that maybe tomorrow we have a bit of a pullback in the semiconductor index because it went 0.1 above yesterday's level. So this is F. Could be /B, but it's an F. That's the time on last night discussing. I've spent time on with subscribers. I've spent time on. We've just had, which is stupendous. The leg has gone in a sig move, could be a single leg A, that what I call the single leg A syndrome, because it says if it is a brand new start on a weekly basis of a leg A and not an E left over from the previous buy mode. I can see eyes glazing over right now. My eyes would glaze over listening to all this. But I think for those of you who know the Chapman methodology, this is really significant. The action of the SMH is going in one move from the 44s to the 52s. That's huge. It's the single biggest move in a single leg that it's had since back in May. I think there was a very nice move. This has done it in even less time, a big move like this. If there is a chance that this is brand new A, we can't get a peak D in the weekly chart until sometime in January. If it's a failure pattern, because it's going to just go one move up, it's usually 2 moves. It goes E and then F, and then it goes kaplop. That's the weekly chart pattern of October of 2008. If anyone remembers that, there was a sell signal, and then you had that move to the upside, and I said, this is like a coda to the big move. This is the one that tells us whether or not we're making a major top. This is the same thing here, that it's actually very exciting technically in the Chapman wave, because at this particular point the weekly chart hasn't crossed, because it's not yet Friday at 4 o'clock. We don't know whether it's going to, the MACD is going to cross positive. Stochastics at 86, that's good, but 92 would be really good. But 86 says there's still a chance to go back below 80 if there's a sudden move next week to the downside of 3 or 4 points. And then comes this whole thing kicks in of, is it a single move up that would fail? The reason why I'm giving this whole spiel right now is because I've been working on these charts for weeks and weeks and deciding if anything happened that even resembles something like this, how would I explain it? What techniques would I be looking to suggest that we're not making a brand new breakout buy mode that's taking us into January in all these indices? Or what if this is just a sudden residual spike of energy that's left over and it's all over in a week or two? Do we go down and poof, do we go down really sharply? I mean, this is horrible when I'm saying on the one hand, if this is a leg E, it says be careful, but if it's A, it says that's fantastic, you've got to buy every single dip. So I'm giving you this because you are in the short position. Right. And today, instead of being down, not only did you go and touch the 9-period moving average, but you shot back up, and the stochastics at 92%, and the MACD is still good. I'm suggesting that we need to wait just a couple of days, because there's a chance that we actually do get that G, and G is the failure next week, Tuesday or so, and then we start down for a brief period just after Thanksgiving into early December, and then we have another rally. That's the situation that I might be looking at. So I'm trying to give you a little warning here that says you might be really close on the SOXS. Let me get that SOXS. Yeah, SOXS. You might be very close. It's at 1598. Maybe it doesn't even go below 1545. So you get stopped. So if you were to get stopped,
yeah,
I'm sorry, what?
I'm at 1584. That's what I'm in at.
So you're 1584, and it's at 1598. So you're in the money right now. But it's not a great candle, and it says, "Whoa, be careful," because this candle could test the low that was made of 1581 3 days ago. So all I'm suggesting is, if this was a starter position, then I'd say to you, you know what? For 80 cents to a point, it's worth holding it, because we might really be in that situation that we get that count that goes to a G in the Dow and the S&P and even the SMHs. And if wrong, then the SOXS, which is the what is it called? It's actually called the Direction Daily Semiconductor Bear three times, so 300% short the SMHs, because it's down $1.78 right now, 1.78%. But that's only 29 cents. But you can see how big the percentages are. Well, I don't have to tell you. You know that you were looking great early this morning, right?
Yeah, it was at 1670.
It was at 1679. It's a big percentage. So I don't want to. I'm just talking risk reward right now. Right. If it's a small position, I'd say a 40 to 50 cent risk reward right from this moment. I'd say that's a permissible thing, because tomorrow it could be up a little bit, and then Monday it could be down a little bit, and then Tuesday it really starts to break out. That's the possibility. But I just want to give you that as the warning. So what am I saying? I'm saying below 1570, you may be within 20 cents of a nice turnaround, but you're going to have to weigh the pros and cons of that. And at the same time, when I'm looking at the SMHs, it's saying that this particular pattern that we're looking at right now, I've seen it before many times, and there is a chance that we get in the Chapman wave a G and not another D, but a G, and the G is what you have to be really careful of, because that's the one that comes down. And what happens is that the price comes down, the MACD takes a while to break down, stochastic starts to go down, and it's a slow process until it really takes out. In this case, until the SMHs take out 51, and certainly I think that was the Intel gap back on the 31st of October at 50.97. A lot's going to have to happen for the MACD and stochastic to break down so you can get that price. So I'm suggesting that maybe you were early by a day or two. So keep that in mind and see how you want to configure this. You might want to just say, you know what, I'm going to take my profit now. If I miss a better entrance, that's okay. I'd rather be getting the trend on the SOXS on the way up than on the way down. I don't have to be catching a falling knife. And then just watch closely how the SMHs unfold, because this weekly chart breaking out like this, if it closes nicely above the high of the week of the 19th, above 52.68, I'm just going to have to say, you know what? I think that October decline was a major decline, and this thing is recycling high. Look at the SMHs on a monthly basis. Look at this. Right here, if you're looking at my charts, if I can grab it, look at that. We are back. This is almost impossible to believe. We are back to the whole breakdown area from 5130 that started basically on May of 2001. The QQQ are in fact at 103.68, only 17 points away from the all-time peak of 120.50, and the high of 103.60 is being tackled right now from September of 2000. So I hope that gives you some kind of sense of what I'm looking at.
Yeah, it does. Thank you.
Thank you very much for calling, Mark. Mark in Denver. We'll be back. We've got one segment to go. Basil Chapman, Tiger Technicians Hour, and the Dow is up 10. 10 S&Ps up.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi folks, so here's a pattern that I'm looking at, the QQQ series. Look, there's the leg. This is not the legs of the Chapman Wave. This is just a single move to the upside. Then it starts and turns into an oval pattern. That's the body. Then it forms the neck, and then you start to get the head, and that head should see a beak come down. And what does it look like? I drew it in for my subscribers this morning. This is what we're looking at in the Dow. It's the same thing. Long leg, a body. Now, in this case, The neck doesn't have to be very high. It just needs to be above, in this case, 17,705. So it's begun that, went to 17,735 in the Dow. But this is a pattern that's a possibility. It also says that in this particular move, we could get a nominal new high, maybe 17,740s, and then it pulls back, and then it suddenly spikes to 17,770s. And then that is where you've got to be the most careful. But anywhere from an E to an F in the Chapman ways, where you've got to be really, really diligent about watching the volatility index and a whole bunch of things. So let me just do this before we wrap up. But I will be doing Daryl's show, the Diagnostic Trading Hour, at 1 o'clock. That's straight after Larry's show. Don't forget, stay tuned for Larry. It should be a great show. I'm really interested in what Larry has to say about gold and the other metals and the different aspects that he looks at based on his technology, technical methodology. So we're looking at the volatility index. Let me show you something here. Actually, I'm going to go. This is even clearer. Look. This is what I show my subscribers. I go through the Dow chart every single day, and then I give another little paragraph underneath on what we should be looking at, how it relates to many other things and patterns, etc. But here I go, these 5 quintiles. I've got the Dow on the left side. This is the 120-minute chart, sideways pattern with nominal new highs. And this is the volatility index, which spiked to a peak. I'm calling this an F in the 120-minute chart just for now. Could be F/A. But look at the move. It went in this up channel, all the way broke out above it, pulled back, and now it's testing the trend line at the bottom. It went from 1574 down to 1373. Now, what I discussed with the folks last night is I had said that it seemed to me that there was something wrong with the VIX index going to 30 recently on October the 15th. That move of 31.06 would have said that the Dow should have, the S&P should have fallen about 15 to 18 or 20%, not just 8 or 9%. That was real hysteria, a very nervous move to the upside. Have we, look at the weekly chart, have we usurped, have we used up all that negative energy now? And in cycles, you don't just suddenly jump back again. Yes, you could go to a D. It seems to me we've got a little time out from the volatility index spiking too high. If it does go above 1690 to 17, that's different. But hanging around here in the 13, 14 area, seems to me that that's buying pressure. And I'm going to be watching this really closely, both on a daily and a weekly chart. Not a monthly, that's not in play right now. But certainly by tomorrow at 4 o'clock, if there is a sudden turn down in the market, volatility index spikes higher, this is a leg C at this particular point in the daily. So I'm watching it. Those are the parameters. Make it as easy. I've done this for years and years. I've given you something really easy to look at. Volatility index, staying in the low teens to the 12s, that's buying pressure. Jumping into the 15 to 16 area says selling pressure is beginning. Jumping into the 17, 18 area says, oh, be careful. This could be going down. The market could be going down a lot deeper. So let's just make it as simple as that. As far as the numbers are concerned, the Dow INDU held the 9-period moving average, a close in the Dow below this candle right here, the candle of the 12th of 17,536. Let's call it 17,480. A close below 17,480 in the next, whatever it is, into next week would say, uh-oh, this move now in the short term is done. It needs a rest. That weekly is going to be critical. You see that support there? I'll talk about it a little bit more in Daryl's show, but we'll also get into these 120-minute chart. The 10-minute chart did make a peak C in the E-mini. I'll be back in an hour's time. Stay tuned for Larry. Thanks for being here.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.